Hey everyone, is your mortgage coming up for renewal? Then you will want to watch this video. If you locked into a fixed rate mortgage when mortgage rates were near a record low, you're probably wondering how the higher mortgage rates today will affect your payment at renewal. That's a question that I'm hearing from a lot of my clients as an independent mortgage broker. But just because your mortgage rate is doubling, it does not mean that your mortgage payment is going to double. We'll go over the math together. And you will definitely want to stick around because I'll share 3 easy ways to lower your mortgage payment if it's too high for you at renewal. And just quickly, if you're enjoying this video, please give us a thumbs up. It really means a lot and will help us make more great videos like this. Now, the first thing you want to do is estimate what your new mortgage payment will be at renewal. And as mentioned earlier, just because your mortgage rate is doubling at renewal does not mean that your mortgage payment is going to double. So let's go over the math together. Now, let's say you bought a property 5 years ago and you took out a mortgage of $600,000. You signed up for a 5-year fixed rate at 2.49%. Your biweekly payment would have been at $1,238, and that would leave you with a balance today of a little over $507. Assuming you're facing a mortgage rate of 5.49% at renewal, you'd think that your mortgage payment would be quite high, but that's simply not the case. Your new biweekly payment would only be $1,600. Even though your mortgage rate has over doubled, you're only looking at an increase in your biweekly payment of 30%. That's nothing to sneeze at, but it's certainly not double the payment that you're looking at, like some people may fear. Is that still too high for you? Let's look at 3 easy ways to lower your mortgage payment at renewal. Way number 1 is to stop paying your mortgage payments on an accelerated basis. On the same $600,000 mortgage, if you paid your mortgage on an accelerated biweekly basis, your mortgage payment would have been higher at $1,342. And because of the higher payments that come with accelerated biweekly, your mortgage balance at renewal would only be $493, and you'd only have 19 years and 3 months left at renewal instead of 20 years. If you kept paying your mortgage on an accelerated biweekly basis based on a mortgage rate of 5.49%, you'd be looking at a mortgage payment of $1,723 every 2 weeks. However, if you switch your mortgage payment frequency to a regular biweekly basis, you're only looking at a payment of $1,589, and that's a savings of $134 every 2 weeks. If that payment is still too high for you, let's talk about the second easy way to lower your mortgage payment, which is extending the amortization period on a mortgage transfer. If you're making extra payments on your mortgage, did you know that you can extend your amortization period back to what it normally would have been if you hadn't made the extra payments? That's right, it's true. And it would still be considered a mortgage transfer rather than a refinance, so you would still qualify for best mortgage rates. Using the same $600,000 mortgage example from earlier, let's say you made lump sum payments during your mortgage term and your mortgage balance was $467 at renewal. In that case, you would have 18 years left on your mortgage instead of 20. If you kept your mortgage amortization at 18 years and chose to pay it on a regular biweekly basis instead of accelerated, your mortgage payment would be $1,566 every 2 weeks. But if you extended the amortization back to 20 years, what it normally would have been without making the extra payments, you're only looking at a biweekly payment of $1,474. That's a savings of $92 every 2 weeks. Here's a fun fact. If you have a collateral mortgage, you actually have the ability to extend the amortization period of your mortgage back to 25 years, regardless of if you've made extra payments. And it's still considered a transfer and not a refinance, so you're able to qualify for best mortgage rates. If you have a mortgage with a home equity line of credit, then you have a collateral charge mortgage. If you have a mortgage with a big bank, it's more than likely collateral as well. If you're not sure whether you have a collateral charge mortgage, you can speak to a trusted independent mortgage broker like myself, and I can find out what type of mortgage you have. Again, using the same example as before, a $600,000 mortgage, let's say that you are 10 years into your mortgage and you're paying on a regular biweekly basis. That would mean that your mortgage balance would be around $403 at renewal. Based on a mortgage rate of 5.49%, your regular biweekly payment would be $1,512 every 2 weeks. But since you have a collateral mortgage, if you stretch the amortization back out to 25 years, your new regular biweekly payment would be $11.34. That's a savings of $3.78 every 2 weeks. The third and final easy way to lower your mortgage payment is by refinancing your mortgage. You're able to refinance your mortgage for up to 30 years, which can reduce your mortgage payment dramatically. And if you want to switch mortgage lenders at renewal, but you're not able to because of the mortgage stress test, stretching your mortgage out to 30 years can be helpful as well because it makes it easier to qualify with the lower payment. Using the same example as before, let's say you have a mortgage balance of 403 at renewal and 15 years remaining. You don't have a collateral charge mortgage and you haven't made any extra mortgage payments. So the only way for you to extend your amortization period is by refinancing your mortgage. If you simply transfer your mortgage, again, you're looking at a biweekly payment of $15.12 every 2 weeks, and that's just too high for you. So you've decided to refinance your mortgage. In our example here, we'll use a slightly higher mortgage rate of 6.29% rather than 5.49% because refinances typically come with higher mortgage rates, but as you'll see, it will still provide you with a lot of cash flow flexibility. If you extended your amortization to 30 years, you're only looking at a biweekly payment of $11.40. That's a savings of $3.72 every 2 weeks. Wow. Remember, this isn't necessarily forever. Once your cash flow situation improves or interest rates drop when your mortgage comes out for renewal, you can always shorten your amortization period or make extra payments during your mortgage term. And those are the 3 easy ways to lower your mortgage payment at renewal. If you enjoyed this video, please like, share, and subscribe. It really means a lot and makes a huge difference. And if you have any questions, please comment down below. You'll also find a link to book a no obligation one-on-one mortgage consultation with me. Thanks for watching.